Item 17? No, 18. Di. Where's she gone? Oh, she's gone. Is Di not going to be here? You're up, Di.
Sorry to keep you waiting.
No, that's fine. So I asked you to bring this paper in a way as a starting point for explaining the overall position around our insurance.
Yes.
Which you've done, and that's a very good paper. And so perhaps if you could just go through the headline, which is really what insurance coverage do we have, above ground, below ground, and just give a brief summary.
Okay. This does reflect the insurance that you as council signed off on in June and in August of last year. So nothing's changed yet. We don't change it again until June. And as the Chair just said, it's split into the above ground and below ground cover. Now, the point to note with both below and above ground is that we are not actually fully insured for either our above or below, and that's largely because it's not possible to get that much, but also too, when taking insurance cover, you have to try and assess what you think the maximum loss will be. Now, in order to help us with that, we're currently engaging RMS, who are an American firm like GNS Science, but bigger and wider, and they do more modelling, and we've engaged them to do some assessment for us so that when we come to place the insurance cover again in June, we have a better feel for what our maximum loss would be in the event of a earthquake along the Alpine Fault. But for now we have, and if you look at point 5, that's our above ground cover, and this is some work that Adrian has done, and thank you, Adrian, for that. And you can see it's split into our the bit we self-cover, the bit that's covered only for fire, and the all other perils. And if I just draw your attention to the all other perils, that's the bit that's worth 2.5 million that we have 1.6 million of cover for, so it's on a first loss basis.
So just say those numbers again. 3.5.
I was hoping if I went quick you wouldn't. 2.5. 2.5 is our total above ground
billion, yeah,
value, and we have 1.6 million of cover on it, and that is on a first loss basis. So in essence we are covered up to $1.6 million worth of damage.
Billion.
It says million here. Yes, I think. No, it actually says 2,510. So you're right, it's 2.5 billion. 2,510 million. And we have 1,600 million of cover.
Yes.
The point is we're not fully insured. We can't get full cover, but all of our buildings that have been repaired to a higher standard than what we had in the past. So while it is a risk, it's a risk that council has to live with, and which, as I said, this reporting that RMS are doing is will help us to quantify it as to what the exposure is. We also have other buildings there that we cover for only for fire, and we've brought that to your attention before, and those are things like Provincial Chamber and our council building that are still not repaired from last time. And then lastly, we have a very small amount, which values of below 200,000 each, that we self-insure for. So that's the position for the above ground. The position for the below ground is, this is the one where the Crown provides up to 60% of funding if we as council can show that we can meet the 40% cover. And again, the insurance cover there is 6.6% of the value. We're self-covering 33% of that, and 60% met by the Crown. Now, in the event of minor damage, we're well placed. In the event of major damage where we exceeded our insurance capacity, we actually have a bigger issue than not having enough insurance for it, and that would be something that would have to be addressed at the time.
Hey, was that Okay, well that's somebody's verdict on the insurance.
All I can say is we are seeking more information so that we have a clearer view of what we know what we're covered for. We don't know exactly what our exposure might be, and that's the work we've asked RMS to do for us for this year. It also ties into the work that Mike Galuli's doing as part of his bigger picture and as part of the bigger council scene, city scene.
Okay, can you go back to 5.3?
Yes.
Where you're talking about the cover on a first loss basis.
Yes.
Can you just expand on that?
Well, it's just to repeat what I said before, our insurance cover is worth 1.6 billion. Our total assets are worth 2.5 billion. So we have, in the event of a total loss, we have a shortfall.
Yes.
We would equally have a shortfall on our below ground cover. Although we have steadily increased our insurance cover each year, and we have, as the markets become more comfortable with the city's position, it is still not possible at the moment to actually get sufficient cover to fully cover for everything. But the other question to ask is that the best position to be in? Insurance is very expensive. What we are working on this year is going, rather than trying to take as much cover as we can, what cover ought we to have? And that's the paper that we will be bringing back to council once the piece of work has been done.
Yeah. So basically, you never insure your full asset base. You insure on the probability of loss.
I mean, we used to before the earthquake when cover was readily available and not very expensive, but it's not the way to go. It's part of it is improving the condition of your assets, which we've done. The building code's been improved. They're built to a higher standard. And we send more information across to the insurers so that they know exactly what they're covering, and we've done all we can to reduce the chance of loss on our new buildings.
Okie dokie. Any questions, Yanni?
That last point that you've made is that we do all we can to reduce the loss on our new buildings. Some of us are struggling to get funding for resilient type foundations that mean in another event we don't have to go through a complicated insurance settlement. So I'm just not quite sure how the insurance aspect is talking to the built aspect, so that when we're doing these things we do actually build on a level of resilience.
When you say some of us are struggling, I'm not. Can you just expand on that?
Power library, pretty modest facility.
Yes.
Yeah. So the Apawa Library, which is a pretty modest facility, we've had to reduce the budget for the foundations in terms of resilience because it's seen as, you know, an ability to be able to be done. It just worries me that in our design of our new buildings, we're not building in a level of resilience that we should, to mean that we won't need to use the insurance. So I just kind of want to understand how the insurance aspect is kind of communicating to the facilities, so that when we do that, we can consider what the risks are.
We are talking to our engineers for the larger buildings, the ones that are currently being designed, with that exact same thing, and putting them in touch with the insurers and with the insurers' own engineers, so that there is better communication between them as to what level of foundation can be insured and what difference does it make. So we are having that discussion right now on the larger buildings that are being built. I mean, the smaller ones, it's not always possible, but the smaller ones, the real risk and exposure is around the bigger council buildings, and that's where the focus is going.
So, I mean, things like the idea of taking the money that we'd be paying on insurance and putting it into some sort of resilience fund to improve the resiliency of our built infrastructure, is that something that we've considered, a bit like what Orion did with their network? So rather than paying lots of money on insurance, we actually look at a number of buildings and say, actually, if we put the money into making them resilient, that's a better investment.
I think in a way that's exactly what is happening, because for starters, capital, not OPEX, which is cheaper, but it is what's happening on the larger buildings. Not perhaps in the way that Orion went about physically not taking cover and making the conscious effort to build up their infrastructure, but with the work that's going on, it is exactly what is happening.
Okay. And just the two final questions. One is, The QS, I'm really heartened. I think one of the issues previously has been the way we've done valuations. You do refer in the report that we're actually getting quantity surveyors in 5.7,
Yes.
assessing our key buildings, so we can have confidence. So just can you just take me through if we've done all that QS work, or whether there's still an outstanding quantum to go?
No, each time we get the assets revalued, we ask the quantity surveyor to check specific assets agreed with the valuer on the ones that will benefit from that input, as opposed to the ones that won't. So it's been something that's been in place now for the last 1, 2, 3, 4, I don't know, Adrian, 4 or 5 years of insurance valuations.
Right.
Since 2014.
Yep.
So I'm just trying to understand, is there a gap between having the QS information about and the valuation for what these facilities are worth to replace, or not? Is it all have they all been done?
They've been done.
Right.
They have been done since. It's not like we're working progressively across. We had the ones that needed valuing done with a QS from 2014 on, and when it was redone again, because remember, insurance is done in 2 interim years by way of a desktop, and then the full city assets are revalued again every 3 years, and it's been done now. So that would be 2 whole rounds. Yes, plus 2 complete rounds of insurance, plus the interim years with desktop.
Okay, great. And the final question was just in regards to leaky building exposure. Do we have cover for developments that are being done in terms of
Now
leaky buildings?
The only exposure we have around leaky building could be for ancient sort of buildings that were built some time ago, in which the leaky building exposure is being found, but current policies do not offer leaky building cover.
Right, but we do have it for existing buildings.
Well, they'd have to be very old buildings. Chris is jumping up and down over there.
We do have cover for leaky buildings under our PI policy, but it's the buildings since the termination of the risk pool cover only.
So for buildings that others build that we consent, we've got some indemnity cover.
Yes.
For our own buildings, we do as well. Okay.
Glenn?
Have we looked at catastrophe bonds as well?
Yes, we have.
Okay.
We've looked at them twice
Yep.
as an alternative. Particularly for earthquakes, where we've come unstuck is that if you want a catastrophe bond, you have to define exactly what it's covered for and exactly what area. And although we've spoken to the engineers, we can't get them to tell us exactly where we put the monitors, exactly how much ground shaking or vertical change we're covered for, exactly the size of the earthquake cover. And unless you can define it reasonably well, then you could have, for example, you could be covered for something up to, I don't know, 7.2, and if it was 7.1, you wouldn't be covered. So it's very hard to actually define it.
You can.
Anne's not here,
bonds-
but she's on the AF8 group. I wonder whether that's something they would look at for
Who, sorry?
Anne Columbus. She's told us she's on. Sorry? Yeah.
To come up with the resilience and risk finance stuff, I wanted to move an amendment because we're only going to receive the report, and I think we should
Okay.
call out the resilience and risk finance section of the report and ask for that further work to be done and reported back through
Yes.
perhaps the insurance subcommittee that we've just established.
Yep. Vicky?
Yep.
Thanks, Di. Just in relation to the
comments that you've got in 5.10 and 11. So the current value of the infrastructure assets below the ground is 7.2 billion,
Yes.
and 480 million of insurance is available, and then in the 5.10 it says that provides, this policy provides full replacement cover for the 3 waters underground infrastructure.
Now, what I'm saying is, for underground, we're only liable for 40% of the risk. Under the government's current policy, it will cover up to 60%.
Right.
We can show we can meet 40%.
So
Now-
480 million is 40% of the value
No,
of the 3
That's
waters.
6.6%. It's not possible
Yeah.
to get cover for the value of our
Yeah.
assets. It's not
Yeah.
possible to get that. Therefore, we're relying on our balance sheet in the event of a
Right,
significant loss.
so we don't, so that's why the middle sentence in 5.10 was a wee bit misleading when it says this policy provides full replacement cover for the Three Waters underground infrastructure. We don't have anything like that, do we? Because that's our underground assets, which are really, really hard to insure, and we can't.
We don't have full cover. The cover we've got does give full cover up to that value.
I think it's that policy covers it, but that policy is only for 480 million.
Yes.
Yeah.
Yes.
I mean, similarly, 5.1 is slightly misleading as well, in the sense, and that's why I drew it to your attention that it's actually not covering the full 2.5
Yeah, no,
billion.
I get that. So in the event that something happens and there's the fault line goes, then there's about 2.4 billion that wouldn't be covered by anybody of underground assets.
Potentially, yes, but part of what we're trying to work on, we're doing above ground this year, and we're working with Mike Gallerly to look at below ground next year, is to try to get a feeling for, in the event of an alpine fault, what is the range of councils cover. Now, the reason we've gone to RMS as opposed to GNS is because RMS, after talking to them both, are far more sophisticated in their modelling. They have access to wider information, whereas GNS is a little more narrow.
Right. And the 5.9, where you say the Crown will provide 60% of the cost of reinstating damaged horizontal infrastructure assets. So if the alpine fault goes, has the Crown actually got the capacity to deal with 60% of 2/3 of New Zealand?
Probably not. I mean, to be honest, who would know? Because we don't know what the extent of the loss would be. But the point is, we can't actually cover ourselves to fill the gap either.
Yeah.
And that's part of why, since the earthquake, so much work has gone into building things stronger and better, using better materials.
Totally get that.
I don't know whether Dave would have something that he would add to it, but in essence, it's trying to shift the loss by other means.
I totally get this. I just wondered if there were other things embedded in here that we perhaps weren't aware of. Just in terms of the Crown providing 60% of the cost of reinstating damaged horizontal infrastructure, is there a priority order, or is it just first and best dressed, or is the Civil Defence Emergency Plan absolutely silent on that?
It is absolutely silent.
Absolutely silent.
Yeah. We've been through it once, so we kind of know how it works.
Well,
I mean, just to give you an example,
except
if you think
it was
of
more localised.
the HI, the total project was about 2.9 billion. The Crown was 1.7. We were 1.1, and you know, the value of our assets obviously is pretty huge, but you know, the chances of a total loss are pretty. If you get to that point, none of us are going to be here. So it's.
No, I was more concerned about what happens when the alpine fault goes and the whole South Island and a big chunk of Wellington's
gone with it. Then the Crown's 60% of reinstating that will be really interesting.
Yeah.
Yes.
Yeah.
So it's just completely silent on it.
Yes.
As you would be. If
I mean, the previous government did review this, but it didn't finish up anyway. Phil?
There has been talk of changing it, but nothing's been changed to date. It still sits at that. And as I said, that's why we take other means to try to reduce our loss.
Thanks for your report, Diane. It's extremely important. And just the questions you raise at the end of it, I'm glad we're having there's going to be more information coming to us. But one of the questions you raise there is, are the right assets insured to the right limits against the right perils? And I guess we're talking about well, clearly the alpine fault is an obvious one, especially because we got a wee reminder a few minutes ago. But I'm just wondering about the more gradual one, sort of perils, like, for example, climate change, and particularly how much we can rely on insurance to cover sort of those future-related costs, whether it's fire risk or sea level rise and inundation and those kind of things. I'm just wondering.
I don't think insurance covers climate change, to be honest. I think it probably falls into the act of God category.
So areas affected by sea level rise, including people's housing, potentially wouldn't be covered.
No, it's not covered, and that's again why we need to look at other things, and that's partly why, you know, we need to be discussing with the Crown what the policy is as far as what each council's approach is to trying to reduce its exposure. but insurance is never the best. I mean, insurance is like what you use when all else has failed, isn't it? When you've taken all reasonable care, done what you can to reduce your exposure, insurance is what's left.
Thanks, Di.
Any other questions?
Change conference, there was a presentation by the insurance companies on the risk that they faced from climate change, and they've pointed out all the areas of New Zealand that are subject to it. The difficulty was when I was listening to them, I was sitting with a group of bankers, and they were saying, I don't know why these guys are worried. They've got the policy for a year. We've got the mortgage for 25 years at least. It's way more of a problem for us.
I mean, it's a huge cost, and it's obviously something that, as you say, I know it's part of our policy going forward, but equally we need to be working out, when I say policy, I don't mean insurance, I mean it's part of our long-term plan of what we're working towards. But it's a huge exposure for the whole of New Zealand, unless you're on hills.
Okay, well, thanks, Di. This is, it's, as Phil noted, it's a very important area. It's no longer just a static thing. Insurance is something you've got to monitor and keep looking at every year as the world changes. And it's good that resilience and risk finance work is being done, and the Mayor's requested an additional resolution there, which I'm quite happy with. So I'm happy to move that resolution, that we receive the information in the report and request further work to be done on the resilience and risk finance, and for staff to report back through the insurance subcommittee. Happy to second. Seconded the Mayor. Any debate? I'll put the motion. All in favour say aye. Aye. Against? That's carried.